Okay, the technical department, Yogesh, we are ready.
I'm here, sir. Then start.
Good afternoon to one and all present here. I, Munira Syed, BCom coordinator on behalf of Sri Ala Tiwari Degree College, welcome you all for the online webinar on integrated and non-integrated system of accounts. As we know that accounting information is important for every business which serve the needs of variety of interested parties. In view to understand the system of accounting in simple and precise manner, we have a great personality with us. A warm welcome to CA Ketan Diora sir. He is a partner in Babulao Diora and Co. He has 20 years of experience. His main field of services are direct and indirect tax, accounts, and immovable properties, to name a few. I would also welcome our principal, sir, Dr. Sanjay Mishra, sir. Thank you for your presence. I hope, under the guidance of Ketan, sir, all participants will be acquainted with the required knowledge. Over to you, Ketan, sir.
Yeah. Thank you, Marina, for the kind words. And I hereby welcome all of you to this webinar. And within this given time span, I would like to enrich your knowledge regarding integrated and non-integrated system of accounts. Basically, the topic allotted to me is very much relevant in nowadays, because as such, with new Companies Act amendment, new system of accounts and requirements have come into picture. So it's a integral and non-integral system of accounts. What do you mean by integral? So integral means collectiveness. There are requirements of maintaining two types of books of accounts regarding cost accountancy and financial accounts. So there are so many things overlapping, and by looking into the system, the integrated and non-integrated system of accounts have come into picture. As per the amendment by the Companies Act in 2013 regarding maintenance of cost accountancy records, this now has a lot of importance, because as such, Companies Act requires the companies having turnover of manufacturing companies having turnover of more than 50 crores of rupees in a year. They are required to maintain their cost account records as well as your financial accounts records. So it's very much into picture. And system of accounting, which is one set of accounts also maintains in both the records of cost and financial records. That's called integral, and non-integral is where both the system of accounts, books of accounts, sets of accounts are kept separate. So in a way, it's a system wherein both has its own advantages and disadvantages. So if you see, integral part means integral means two sets of accounts or books merge into one composite system. So as per the Chartered Institute of Management of Accounts, London, they say that this is a system wherein the financial and cost accounts records are interlocked. So to ensure that all the relevant expenditure is absorbed into cost accounts. So basically, when you see the cost accounts record and financial account records, some of the expenditures are having common entries. I mean, say for example, if you look into manufacturing expenses. So in financial accounts as well as in cost accounts, both we need to record this kind of expenditure. So it's a overlapping thing for both the things. So the books of accounts, sets of books of accounts are kept in such a fashion that both the accounts are having same records. So I'll touch upon the system of accounts having, integral system of accounts is having following advantages. There is no need for reconciliation. So when you keep both the sets of accounts, you need to reconcile with each other, because if you are having separate sets of accounts for cost accounts record and as well as financial accounts records, there you need to have reconciliation between the two systems, because both the systems will be having different final profit, that is the net profit. So in that you need to reconcile it. But if integral system of account, I mean integrated system of accounts are kept, then you need not go for reconciliation. The system of accounts system is economical because duplication is avoided. Because if integrated books are kept, then obviously there will not be any overlapping. Accounts information is readily available and the correctness of data is automatically checked. So if one wants to know at any point of time what is a figure of profit, then it will be automatically come to know by what is this profit is there. It enables introduction of machinerized accounting. So if integrated system of books of accounts are kept, then one can have these records online, and any point of time you can refer your books of accounts with a particular set of profit or not. That is that you will come to know. Then it comes to better understanding of existing amount of staff, because if the integrated system of books of accounts are kept, then once you tell your staff that these are the procedure, these are the system, these are the coding systems, and you should maintain your books of accounts, and you should uh, keep your records in this fashion, you prescribe the methodology, then it becomes very easy for the staff to maintain the same. So basic features of the system of integral system is there is no need for cost ledger because all control accounts are maintained in financial ledger. So financial ledger itself will be having cost ledger, and it's not required that all the control accounts are kept in the system, so that it's not required to have separate sets of things. There is no need to open a cost ledger control account because both the aspects, debit and credit, of all the transactions are recorded in respective accounts. So you need not be having a cost ledger control account, but at the same time, you can maintain both the things simultaneously. Subsidiary ledgers like stores ledger, work in progress ledger, finished goods ledger accounts are maintained as it is done in integral accounting. In addition to sales ledger, containing a purchase ledger, all these accounts are kept in financial records itself. So overhead ledger is also maintained to contain separate accounts of factory, administrative, and selling and distribution outward. So overall, it's a one set of account wherein you can have both the system at a time. So in this integral part of accounting system, the important control accounts are kept as follows: stores ledger control account, work in progress ledger account, finished goods ledger control account, wages control account. So if you see the system which is maintained to keep your system intact is a very simple one with the integral system. Factory overheads, administrative, selling, distribution control account, sales ledger control account, purchase ledger control account. So all the control accounts are part and parcel of your financial books of account only. So it's very easy to maintain, very easy to summarize, very easy to remember, very easy to approach your staff and tell them, okay, boss, you should keep your books of accounts like this. So it is a very easiest system. The profit and loss as per profit and loss account is transferred into profit and loss account, appropriation account first, and there any adjustments are there, then it can be looked into. The degree of integration must be determined in advance. So this is a system wherein integrity should be maintained with a given approach, saying that, say for example, if I want to maintain integrity up to a level of production, then I must specify that this many accounts and this many ledgers should be integrated, because intensity itself determines how much books are organized with the given system. If I say that up to production level it should be integrated, then it must be integrated to that thing, and the rest of the things, selling, distribution, overheads, it is not integrated. But if I want to integrate in a full sense, then I must be determining it, and I must specify in advance that this many level or this much ledger or this many accounts should be integrated one. So prerequisite of maintaining any system in the integrated manner is that you must specify that it is intensity of the integration. There should be accounting procedure in respect of treatment of provision of accruals, prepaid expenses. Yes, this is where you should be very cautious one, where prepaid or outstanding expenses are maintained. I mean, when it is recorded in the financial accounts, we very much know that we are having periodicity of that expenditure. According to that, any outstanding expenses or prepaid expenses are recorded. But in cost accountancy, this is not so, wherein we should be very cautious that how should we uh, determine this expenditure and how should we record in the books of accounts. So basically, it is all about how to determine the things and how to go about it, because once the systems are implemented, at the stage of implementation, everything should be determined. One more thing, nowadays all the accounts are kept in computerized system, wherein coding is very much necessary. So following the double entry bookkeeping accounting system, the coding is required. If coding is there, perfectly mentioned, determined, and if it is known to every staff members how much coding and what kind of coding has been done to the system, then it is very easy to have such kind of thing. So coding is also very important. So essential prerequisites of integrated accounting system is degree of integration, as we discussed, up to what level we want integration. So integration of charges, entire accounting records, or partial accounting records is required. So according to that, we determine things. Suitable coding system, as we discussed, it should be developed. Accounting policy, yes. Accounting policy, as we know, in the financial accounts, when the accounts are finalized, at the time of finalization in the notes, we say these are our policies, how we have recorded the transaction, whether have we followed bookkeeping system or not, what are the policies we have followed for, say, accounting standards or any particular typical product in which the company is dealing. It has some peculiarity that is also determined. So in accountancy thing, I mean, when integrated systems are maintained, then we should specify that these are the assumptions we have done. These are the policies which we have recorded, by which it's very clear for the person who is maintaining the books of accounts to have perfect system of integrity. Coordination. Perfect coordination should exist between the staff responsibility for the financial accounts and the cost aspects of the accounts, in which the essential proceedings of various accounting documents should be ensured. Of course, in any organization, whether we are having integrated system or non-integrated system, or only we are recording financial accounts, definitely coordination is required. But coordination in this kind of accountancy records maintenance is very much necessary, because we should know what is what is the system in place, and what are the accounting policies which we have recorded, and whole coordination between both the sets of accounts are there. So practical problems when we come to the system is that practical problems are there, certain problems. When this prerequisites of both the sets of accounts are not there, then definitely there are certain things which we should look into. If we don't follow prerequisite, then it might happen that whole sets of accounts are jeopardized. So practical problems arises when certain types of expenditure are there, and which we record in the books of accounts, financial books of accounts, but in costing cost set of books of accounts when we are maintaining in the costing, then for example, when we take example of depreciation. So depreciation, what we have recorded in the financial books of accounts, that might be according to our assumption, but it might happen that, say for example, a capacity of machinery is to produce 20,000 pieces per month in the given 8 hours of working shift. Then it might happen that we over-absorb or under-absorb the things. In that scenario, what should be our assumption and what should be the method of recording the over-absorption or under-absorption of the machinery in books of accounts of cost books of accounts or financial books of accounts, that should be determined. So this is one example. There are a number of examples wherein it might happen that over-absorption, under-absorption, or total, say, for example, right now the lockdown situation was there in that kind of things, how to go about it. So these are small things which are to be determined in priority to have recording of the books of accounts in the integral system of accounts. Non-integral system of accounts, wherein the two separate set of books of accounts are maintained, one for cost accounts and another for financial accounts. So here the system is totally different, wherein both the policies and procedures for recording books, transactions in the books of accounts of finance and as well as in cost account record are to be done, and it's maintained separately from the financial sets of books of accounts. So it is totally different from the things which we have learned in integral system of accounts. I think till now you must have followed what I intend to say regarding the books of accounts and all. Since separate ledgers are maintained for the cost and financial accounts, in this system the cost accounts is responsible for recording cost accounting transactions, and financial accounts accountant is responsible for recording books of accounts for the finance. So here when big organizations are there, they are required to, every manufacturing company having a turnover of more than 50 crore rupees is required to have cost accounts record and cost audit also. So big concerns, big companies having multiple locations, having multiple location factories, this kind of system is very ideal for them, rather to have integrated accounting system. Because as such, their production is going on at a multiple location, and their cost absorption and cost records are to be maintained separately. Because if they don't maintain in separate books of accounts, then it might happen that in integrated system, the whole motto of cost accounts records might get jeopardized. So in all, this is mainly separate books of accounts for cost and finance are done by big companies. So cost account record is distinct from the financial accounts record, and two sets of accounts being kept continuously in agreement by use of control accounts or made readily reconciled by other means. So if we see prerequisite for this kind of system is that policies must be defined, and policy, it should be defined that what kind of transactions are required to be recorded in the financial books of accounts, and for costing account, cost books of accounts, what kind of transactions is required to be maintained. So basically big companies maintain separate staff for this kind of books of accounts, and basic features for non-integral system, let me determine one by one. separate ledgers are maintained for cost and financial accounts. Definitely, because both the sets of books of accounts are separate, and separately all the transactions are recorded. So in all, the requirement is such that if both the financial accounts and cost accounts are separately maintained, then only this system can prevail. Like financial accounting, it is based on double entry system. Definitely, yes. Cost accounts and financial accounts are having the same principle of a double entry accounting system, but in cost accounts, only transactions regarding all the costings, say production cost, selling, distribution, overheads, marketing, all these costs are recorded so that the true cost of a product can come to know. For example, many multinational companies are having multiple product brands. Say, for example, Hindustan Lever, they are manufacturing soap, they are manufacturing toiletries, day-to-day FMCG products. So these products are different products are having different costing line, and different costing line gives birth to maintain separate records for each of the products, so that they'll come to know what is over absorption of overheads, under absorption of overheads. At the same time, they will be comparing their costing records with the financial records, and exact price of that product comes, they can come to know, so that they can decide about future strategy of the product. Basically, this costing records are to be maintained not only for the purpose of companies like requirements, but at the same time, it also provides them to have internal control. Because if the internal control in the costing stage is not there, then it might happen that their competitor will be having same product, same thing, but the cost of that product to the company may be differing from time to time. Like financial records, it is based on double entry system. What we have seen, there are no personal accounts because cost accounts does not show relationship with the outsiders. Definitely, yes. Personal accounts means if we are purchasing certain things from certain debtors, or certain creditors. Sorry. So if I'm having personal accounts, then I'll come to know that Mr. A, from whom we have purchased certain material, what kind of credit we are enjoying and everything, that will come to know from financial books of accounts. But at the same time, in cost books of accounts, this personal accounts will not be maintained. Instead of that, purchase ledger control account or sales ledger control account, these kind of things will be in there. Basically, more about costing is that it's a costing control purpose is always into picture, so that when we finalize the accounts or finalize the at the year end, then over absorption, under absorption of the things will come to know. In real accounts, only stocks are shown in the cost accounts. Definitely, in cost accounts, more emphasis on controlling the production, rather to have exact profit figure or something. You can say the say debtors account or creditors account, which will come to know about from the financial sets of books of accounts. But at the same time, in the cost books of accounts, definitely main emphasis or main focus is on say cost purpose. Transactions affecting the nominal accounts are recorded separately in detail. Thus, cost account transactions affecting nominal accounts are recorded separately in detail. So, nominal accounts, by which we mean raw material, work in progress, finished product, all such things is a part of your nominal accounts, in which department concern is mainly ascertaining the income and expenditure of the business. Definitely, as I told, say for example, multinational companies having multiple products. So they will be having a separate chain of production for different types of products. So for example, as I gave you example of Hindustan Unilever. So in that they are maintaining books of accounts for separate product line. For example, for costing, as far as costing is concerned, cost account, books of accounts are concerned. So separate product line will give them any idea of over absorption, under absorption, and every utilities which they are manufacturing. They'll be having overhead idea, or selling and distribution channel idea, or say marketing expenditure idea. So all this expenditure pertaining to a particular product line, they'll come to know by costing of each product. Under integrated system, non-integrated system, one main ledger, cost ledger, and various subsidiary ledgers are maintained. So this is a peculiarity of cost books of accounts. Since the system is not properly integrated, some items may appear in financial ledger only, while some other item appear in cost ledger. Definitely, yes. This is going to be there, because this is where both the systems are separated from each other. Unlike integrated system of accounts, wherein both the ledgers of costing as well as financial accounts are interlocked. So you need not be going for any reconciliation. But of course, in non-integrated system of accounts, both the books of accounts are separate, but certain items are there which are made part of only financial books of accounts, whereas some are made part of only cost ledger accounts. So costing ledger are separately required to be maintained, and as well as the company already determines that this will be forming part of, this many ledgers are forming part of cost ledgers, and this many ledgers are not forming part of cost ledgers. So when we finalize any accounts, at that time reconciliation is also required, because both the sets of books of accounts are separate, and we need to undergo exercise of reconciliation. In reconciliation, I mean that reconciliation between cost profit and financial profit. If that is there, then a company sees that there is internal control on all the expenditure, production line, and everything. Over absorption, under absorption of any overheads or any expenditure or production, they will record it, and then they will come to know about what is the exact profit of the company at that point of time. Since the system is not properly integrated, some items may appear in financial ledger, as I told. The profit and loss disclosed by two sets of accounts for a particular period will never be the same, and such reconciliation of costing, profit and loss with the total financial accounts is essential. As I told, this is part and parcel of accounts maintenance, because if they don't reconcile between two sets of accounts, then it's going to be big havoc for them, because they know predeterminedly this many financial ledgers will be forming a part of financial accounts. This many ledgers will be forming part of costing ledger. Some accounts or some ledger may be overlapping, because whatever has been recorded in financial books of accounts, they must be recorded in financial books of accounts. But some of the ledgers are there which are not forming part of financial ledgers. For example, cost ledger control account, or say for example purchase ledger, sales ledger control account, or manufacturing expenditure control account. These many ledgers are not part of financial books of accounts, but they will be forming part of costing ledger accounts. So this is there. ledgers under non-integrated accounts, wherein on the costing part, what I'm going to discuss right now. Cost ledger accounts will be having principal financial ledgers as general ledger. It contains all real nominal personal accounts except trade debtors and trade creditors account. So this is the general ledger. Debtors ledger, it is the personal accounts of trade debtors which won't be forming part of costing ledgers. Creditors ledger, it has a personal accounts of trade creditors. It won't be forming part of cost ledgers. The principal cost ledgers are cost ledger. It is a principal ledger in which cost books which controls all other integral in costing department. It contains all impersonal accounts and it is similar to general ledger of financial accounts. So if we want to reconcile between two sets of accounts, then cost ledger and general ledger, it should get 10. This is a prerequisite for a non-integral system of accounts. If that is tallying, then your profits according to your cost books of accounts and financial books of accounts will be the same. But that won't be the case every time because it's not never going to be tallied as I told earlier, because certain adjustments are required for over absorption, under absorption, and all. If that is done, then reconciliation is possible. And if reconciliation is there with the proper fundamentals and proper logics, then it's going to be giving perfect results for books of accounts as well as cost books of accounts. Other ledgers which are required for cost ledgers are stores ledger. It's a subsidiary ledger. It contains all stores account. Stores means by what? It is say raw material, your work in progress, finished goods. If the cost ledgers are maintained till full, I mean till the product is available for dispatch, then it will cover whole your marketing expenses, sales, distribution, overheads, everything will be covered in that. Work in progress ledger, it is a subsidiary ledger. It contains separate accounts for each job in progress. So this is basically required when the company is dealing in multiple products. So separate ledgers are maintained for separate products if the company is producing so many things. For example, Godrej. Godrej is manufacturing fridges, washing machines, microwave ovens. So there are so many products that the company is maintaining. So these are FMCG goods for separate all the products. Separate line of production will be there. Separate line of work in progress will be there. And each and every transaction regarding work in progress is recording in that. So each such account is debited with the material cost, wages, overheads, chargeables to the jobs, credited with the cost of work completed. The balance in this account shows cost of unfinished. So, for example, take a simple example of refrigerator. So refrigerator is manufactured with high steel, compressor in there, then internal fittings are there made of plastics or glasses and everything. So if the refrigerator is in manufacturing process, wherein say a whole frame is made of the steel body and they're maintaining having fittings and everything. If say for example everything is done but I mean compressor is yet to be fitted, then that is forming part of your working progress, and this whatever has been erection work done up to say reporting date, that is forming part of work in progress, and separately it is showing that this good is unfinished one, and in due course of time it will get finished. Finished goods ledger, it is a subsidiary ledger. It contains accounts of completed finished goods and job. So cost ledger is made self-balancing by opening and control account for each above subsidiary ledgers. So the system is formed in such a fashion that it's a telling, and at the given point of time, let's say given point of time means say on the reporting date, whatever is forming part of your raw material, work in progress, as well as the finished goods, everything is maintained separately, and it gives a perfect figures of all such ledgers. So when I have discussed both this system at a point of time, I mean integral and non-integral system accounts. So we'll come to difference between integral and non-integral one. Two separate books of accounts are maintained in non-integral part, and in integral one, both the sets of books of accounts are merged into each other, and one set of books of accounts is maintained. One other record cost transactions and other records financial transactions, that is there in non-integral one. Cost ledger is maintained where in cost ledger is maintained in say integral one, and no, sorry, cost ledger is maintained in non-integral cost of ledger. There are two figures of profit or loss. Both, I mean, if we say, for example, what we have discussed in till now for non-integral one, two sets of profit figure will be there. One in the books of financial accounts, and one will be in the cost ledger account. So reconciliation is also required. Reconciliation will be done according to predetermined system, under absorption, over absorption of overheads and manufacturing facility. So everything will be recorded one to one. There is a need for reconciliation of cost of accounts and financial accounts because there are two figures of profit and loss, and there are two sets of books of accounts. Balances of overheads control accounts, which is represent under over absorption or under absorption overheads, are transferred for in P&L account. There is a duplication of recording of the transaction. Yes, it requires more power for non-integral one, but as I told that it is feasible in those companies wherein they are having multiple location and multiple production facilities, wherein it is feasible for these kind of companies. So this is vis-a-vis costing books of accounts and financial books of accounts, that is integrated and non-integrated one. Another is a system wherein integrated and non-integrated system of books of accounts are qua production facility and qua presence of the company. For example, a company is having presence in say 26 states of India. So in which they can choose one recording facility, transaction recording facility, or they will be having 26 transaction recording facility according to their choice. Say, for example, if the company is deciding that we'll be having only one set of books of accounts in head office, and we will not be having any recording facility, transaction recording facility in all the states, in which whole set of books of accounts is maintained in the head office as determined by the company, but they will not be having any books of accounts maintenance facility in this 26 states. So it's a choice of the company, but at the same time there are certain advantages and disadvantages for both the company, both the system of accounts, wherein say if they are recording all the transactions in head office, then certain expenditures which are required to be done by company in all these 26 states, in which the GST will be levied in certain expenditure, and that GST won't be available, I mean for credit won't be available to the company for certain expenditure, because as such when the services are provided in respective states and the companies providing services to these companies will be having a bill of the local level, wherein local SGST, CGST will be levied, and this won't be, I mean, this credit of this particular expenditures won't be available to the head office. So there are certain advantages and disadvantages, but the system is chosen by the means of you can say their convenience and what kind of requirement of the company is there, how much potential of the company is there, where they are located, and all managerial distribution and managerial things which they decide. According to that, this is decided. So if we look into integrated part uh, and the non-integrated part, wherein all the company which is having multiple location, they will be having separate books of accounts for each location. For example, one company is having presence in Maharashtra, in Mumbai. Second, their branch is there in Nagpur, say Pune or Chinchwad. In that, they will be having separate books of accounts for each of this location, and in each location they will be having separate ledgers, journals, cash book, bank book, everything. Wherein, say for example, in Nagpur, if a company is having their branch, in that they will be recording transaction at the local level, whatever is there. Plus, they will be having head office account in their branch account, branch books of accounts, and in the head office they'll be having branch ledger account separately. So whatever money they are sending, say for example head office sending certain money for their day-to-day expenditure, so they will be passing entry for that, and they will be crediting the state vertical with that thing. And in turn, when reporting date is there, for example, we are having 31st March as the last reporting date. So on 31st March, they will be merging each branch into head office account. So that a single financial result will be presented to the shareholders or stakeholders, and they will come to know, okay, how company is performing in each one. Mind well, in final accounts, when they are presented, at that time they try to show location-wise profit. Say, example, if they are doing particular well in certain state, say for example in Delhi, they are doing much better than Haryana, then they will be showing a separate profit for each and every state, and the stakeholders will come to know about it, that in particular branch they are doing very good, in particular state they are doing very good, and certain efforts are required in increasing sales in particular region or somewhat. So in all, each and every system has its advantages, disadvantages, and the company decides at their convenience how to go about it, what kind of system they will be having, what kind of transaction they will be recording, how they will be recording, and policies, procedures, everything is predetermined, so that when final accounts are there, at that time they will not be having any hassle in reconciliation and everything. So in all, the company's setup and their mindset is very important in deciding the utility of particular system of accounting. Uh, Till now, we have seen integrated and non-integrated system of accounts vis-a-vis location, vis-a-vis system of accounts. I hope that this topic which I have covered till now, I have done certain justice to it. I mean, I will be more than happy to help you out in any confusions are there. Then I'll definitely try to resolve your problem. Uh, any questions? I'm open to any questions, to take up any questions, Mundira.
Thank you so much, sir. So we
Yeah.
have some questions from students.
Yeah.
So we have a question from Sunil, sir.
Yeah.
Enumerate the factors which cause difference in profits as shown in financial accounts and cost accounts.
Huh. So, uh, can you repeat the question again, please?
Enumerate the factors which causes difference in
Okay,
profits.
fine. In costing accounts, there are overheads absorption rate, say under absorption, over absorption. Say I have given the example of a machinery, wherein machine is run, say for example, for 10 hours in a day, and the standard production rate is say 20,000 pieces in a day of 10 hours shift. And if the machine is kept working for say 12 hours and it is producing more overheads, I mean no more products, in that thing the over absorption and under absorption is recorded in cost books of accounts, wherein this kind of things are not recorded in financial accounts. So these are the things which causes mainly a difference between two sets of accounts, sets of books of accounts rather.
One more question, sir.
Yeah.
Which type of industry or company use integrated and non-integrated system of accounting?
Yeah. For example, I mean, basically those companies which are having only one product line, they are mainly going for one or two product line. They are mainly going for integrated system of books of accounts. If the company is having multiple production, multiple FMCG goods or companies having more product line, then they will be preferring for non-integrated one because their setup is different, their production line is different. So they will be preferring for non-integrated one.
Sir, the difference between cost control and cost reduction.
Cost control and cost reduction. Cost control happens when the company is producing certain line of product, wherein it might happen that say for example one production is going for say a chip, a computer chip, wherein they have assumed that this many cost will be there. Say for example material cost, wages cost, or certain overheads regarding their say technology and all. So if they are, for example, they are assuming that this will cost around 2,000 rupees. But for cost reduction purpose, it might happen that technology cost which they had assumed priorly, they are having now more competent method, wherein more competent technology, wherein they can reduce the cost. So they will go for that kind of cost. So that is called cost reduction, and where cost reduction is there. But when we say cost control, so they see that it's not, under absorbed. I mean, any production given at a point of time is not underproduced or somewhat. That is called cost control. So there is very thin line between these.
So the last question is,
Yeah.
is reconciliation of cost accounts and financial accounts necessary in case of integrated accounting system?
No, because it itself is because there will be only one profit, and books of accounts are kept in such a fashion that it's a self-telling one. So that is not required in integrated one. But in non-integrated one, definitely we require this reconciliation.
Thank you so much, Ketan, sir.
Yeah, thank you.
It gives me an immense pleasure to express my profound appreciation to you on behalf of BCom Department of Sri L.R. Tiwari Degree College for giving us your valuable time for the students as well as our faculties. The knowledge you share with us will definitely benefit us in the future. We
Yeah.
appreciate your gesture and hope to receive the same response and support from you in the future.
Definitely, and I would like to provide you with
Munira,
my
Munira.
communication I mean, you can reach me to,
Hello.
with my mail ID and everything. So I'll provide you, Munira. You can provide to your faculty and everyone. If they require, then I'll definitely help you. Help them out.
Definitely, sir. So, principal, sir, you would like to say something, sir? Sanjay, sir? Sanjay, sir?
So thank you very much to Ketan sir.
Yeah, thank you.
Hello.
Yeah,
Am I audible to everyone?
yeah,
Yes,
definitely.
sir.
Yes, sir.
Thank you very much, dear Ketan sir,
Yeah.
for sharing and enlightening our students.
Hmm.
Hello. I believe around there is some kind of technical issue.
We can hear you, sir.
Sir, we can hear you. Sanjay, sir, you are audible, sir.
Now, sir, as today's topic. Hello. Hello.
Sir, you are audible, sir. Sanjay, sir, you are audible.
Okay. Regarding today's topic was about the integrated and non-integrated accounting. I feel that the students have really gained a lot of knowledge around from your particular session, and students have really understood like what integrated and non-integrated accounting system is. As rightly said by you, as rightly said by you, that a non-integrated accounting system uses around the separate accountings for maintaining the cost and the financial transaction, whereas in the integrated accounting system, there is no separation around of the cost and the financial transaction.
Yeah.
In general, if I talk about with the non-integrated accounting system, it is independent system of accounting,
Yes.
and integrated accounting system, as what I explained by you, the cost and the financial accountants are dependent to each other.
Yes. Definitely.
Sir, if I want to know, like suppose if a person
Hmm.
wants to start up around a small manufacturing unit,
Yes.
what type of accounting system needs to be followed by him?
Uh, for a person starting anything small unit, then definitely he would prefer to go for integrated one, because for new startup, for small manufacturing things, he will be definitely looking at the cost saving, and he's having one product line or two product line. In that, definitely will prefer for integrated one rather to go for non-integrated one. Am I audible?
Yes, sir. Yes, sir. You audible.
Thank you, sir. Munira, I believe around the questions which were been posted by the students are
Yes,
been
sir.
taken by you, and I request Munira to just extend around the vote of thanks. And someday, sir, we would surely meet. Someday we will surely meet, sir.
Definitely,
Invite sir to our college.
definitely.
Yes, sir. Definitely, sir.
Okay. Thank you.
Thank you very much.
Thank you, sir.
Thank you.